Did you know that Matterport Stock's recent drop was easily predicted? But before you try to understand how a stock's price might move, first you need to understand about the company itself. So let me explain to you what Matterport is all about and why this stock might be about to become a great investment and what needs to happen here first before we can see a share price reversal. If you enjoy my content and don't want to miss out, subscribe and turn on notifications so you will be alerted whenever I make a new video. Now let's get into it. Matterport is a market-leading 3D platform that lets anyone turn a physical space into an immersive digital twin. Matterport takes real-life physical space and transforms it into a digital twin, which is a 3D model using a combination of different types of cameras, software and applications. This technology has many uses in homes, offices, factories, shops, even museums. If you have ever seen a 3D virtual property tour or a virtual museum tour, then you're already familiar with Matterport's technology. This digital 3D model can be used in many ways, such as presenting a realistic look at a home that a real estate agent can use for virtual tours that reach far more potential buyers than a traditional open house. The applications for Matterport's technology are endless, ranging from retail, construction, engineering and more. With more of the physical world becoming virtual, the total addressable market for Matterport's technology is massive. It's essentially every building in every country in the world. Scans can be captured from any compatible camera, and while Matterport had focused largely on selling their own range of cameras, the advancement in technology now means that most phones are capable of this. Thousands of companies in over 190 countries use Matterport. Millions of spaces have been captured, comprising billions of square feet, resulting in the largest spatial data library in the world, which gets bigger every day. Matterport has been digitalizing the world for a decade now, with the mission of making every building and every space more valuable and accessible. Looking at the investor's presentation, we can see that Matterport has a top-class management team with highly experienced executives coming from major global companies such as Google, Seagate and eBay. Matterport has a $240 billion global total addressable market opportunity as properties move online, and this is calculated at a cost of $1 per month, assuming a market penetration of only 1%, with significant upside monetizing digital property insights and services as high as $1.2 trillion, assuming a $5 per space. Over the past year, Matterport has achieved 116% growth in subscribers, although a large proportion of these are still freemium. Paid subscribers has grown at a rate of 33%. But despite having such a low market penetration rate, the company claims to have 6.2 million spaces under management, which is digitized building scans, and they estimate it has 100 times the amount of spaces on its platform as the entire rest of the market combined. Matterport has a range of high-resolution camera options to suit all environments, as well as a free, no-cost approach of using a decent smartphone. Matterport Capture is now compatible with about 74% of all devices. The company's plan of offering free subscriptions is being used as a way of capturing potential subscribers with a view to converting these into paid subscriptions over time, which tends to be a very good business model in order to obtain a high level of customers quickly, and hopefully a percentage of these will become dependent on the service and convert into paid subscriptions. One of the major advantages that Matterport has is its first mover advantage in a potentially massive and largely untapped digital reconstruction market, which is indicated clearly by the fact that they have 100 times more digital space than the rest of the market combined. Matterport breaks down its revenues into 4 categories. Subscription, which is about 50% of sales, and management expects more than 80% of revenue to be subscription based by 2025. Products account for 39% due to its Pro camera, but I expect this to decrease rapidly as smartphones get even better, with services and licensed solutions making up the remaining revenue. Matterport has an incredibly scalable business model. Operating a freemium model, customers are drawn in with free subscriptions, then gradually transition into paid subscribers as they recognize the value and cost-saving potential of Matterport's 3D data. And this is where the company can make most profit. Subscription business operated at about 77% gross margin during the last quarter, indicating the potential for substantial profitability growth as the company continues to scale its subscriber base and transition away from product-based sales such as cameras, which have very little margin. The subscription-based model provides a recurring revenue stream, which is great to see and offers increased visibility into future revenue streams. Matterport has seen a 29x increase in subscribers since 2018. Cushman & Wakefield, one of the world's largest commercial real estate companies, increased their spend by 26-fold, while Ericsson increased their spend by 60% in just 1 year. In fact, Matterport's customers include 13% of the Fortune 1000, so the potential is there to turn these customers into paid subscribers and a recurring revenue source. This is a very good article on Seeking Alpha that I highly recommend having a read of this. Matterport, bridging the gap between reality and the metaverse. Looking at the recent acquisition of InView, the partnership with Midland Holdings, how the chip shortages have affected the camera sales, and how this can be offset by the increases in subscription fees as more Android smartphone users download its newly launched app, Matterport for Android. So Matterport came to the forefront of everyone's attention in 2021 when Facebook announced its plans for the metaverse. A collaboration was announced between the two companies in 2021, and 1K of 3D digital spaces have been released to train AI systems in the virtual worlds based on physical spaces in the real world. In addition, with the recent release of its app, Matterport for Android, we can expect more to buy into the subscription service given the convenience of a smartphone 3D capture and the multiple benefits digital twins have to offer. In January, Matterport acquired InView, and as a result, Matterport will now be able to develop its next generation spatial data analytics platform that provides powerful machine learning capabilities and InView's advanced technology and specialized team to strengthen the Matterport data platform. And more recently, Matterport announced a partnership with Midland Holdings, one of the leading real estate brokerages. Matterport's digital twin technology would allow Midland's customers to view, buy and rent properties without the need to be physically present. Think of the possibilities for this. Customers can now virtually tour the bedrooms, kitchen, living room spaces of any number of properties, but this also offers a long-term corporate partner in China's massive property market. However, the most exciting point of this partnership is the possibility to virtually furnish or stage its properties, allowing customers to more easily visualize how an empty space can be used. Customers can purchase the furniture that they see on a property through a virtual marketplace with just a single click. Many retailers such as Nike set up virtual stores selling virtual goods in the metaverse, and I feel that this is more a case of when than if for whether the metaverse will be a huge success, and Matterport will be bridging the virtual and physical worlds, giving Matterport limitless potential in the future metaverse application. The reason why this company divides opinions so much is the company's potential for a major role in the metaverse. Of course, anyone who thinks the metaverse is a load of BS will not see the potential here, and even large amounts of those who think the metaverse will be big still don't see the potential. Take a moment, search Google Images for the metaverse. What do you find? Lots of images of a world that looks very computeristic. The image that most people have of the metaverse is like that of a PS2 game from 20 years ago. Do you really think that this is what Mark Zuckerberg has in mind when he rebranded Facebook as Meta? Even computer games don't look like this anymore. Gaming has evolved so much that many games now look very real at first glance. This is where Matterport comes in. Why would you want a metaverse that looks like this when you can have a metaverse that looks more like this? The real vision for the metaverse is of a world that is almost real, almost like a Matrix type of world. For example, this article on nasdaq.com discusses this brilliantly. Check out the link in the description below. Is Australia a place you've always wanted to visit? In the metaverse, you could explore the Australian outback more easily than you can get into an Outback Steakhouse in your hometown. You could see the Sydney Opera House, the street art on Hosier's Lane in Melbourne, then stroll the Swan River in Perth, all with zero travel time. Several sites like these are already captured as Matterport digital twins. From there, the Web3 metaverse incentivizes Matterport service partners to map out all of these major cities and destinations. This is what the metaverse will be like, and realistic spaces were exactly the vision Mark Zuckerberg presented at his big metaverse event back in October. Guys, if you enjoyed this type of analysis and detailed look into the stocks that I cover on this channel, Please smash the like button, it costs you absolutely nothing and it helps with the algorithm and helps my channel get noticed. On Wednesday after market close, Matterport announced full year 2021 results. In this they highlighted total subscribers increased 98%, subscription revenue rose 47%, recurring revenue grew 66 million, but a sizable loss per share. Relentless innovation is the norm at Matterport, and with new products like Matterport Access and Matterport for Android, we are racing to bring precision 3D capture and digital twins to everyone in the built world. Looking forward, the physical world is going digital. Every industry on every continent is embracing digitization, and I am more confident than ever about the company's outlook for 2022 and the decade ahead. So management are looking to the near term, but this comment shows me that it is the long-term plan that is of utmost importance. The goal here is long-term. Before I look at the guidance for the company for 2022, which is a reason for the sharp drop in share price since Wednesday, first I want to look at the actual figures. We can see that Matterport have total assets of 719 million and total liabilities of 451 million. This gives Matterport an asset to liability ratio of about 1.5 to 1. The assets are mainly highly liquid asset, and a huge portion of liabilities is this earnout liability. This is subject to remeasurement, but without this, the asset to liability ratio would be closer to 10 to 1, which is fantastic to see for any company. And the shareholder equity would be closer to 650 million as opposed to the current 268 million. The current share price puts Matterport at a market cap of just over 1.7 billion. Looking at the income statement, we can see that Matterport has revenue of 111 million for the year, showing solid revenue growth and a really good gross profit. We can see clearly here the shift towards the subscription side of the business, with subscriptions up nearly 50%, while product sales have actually declined. But this is a good thing. Subscriptions are what will eventually drive profits, with a margin of about 75%, while products have much lower margins. However, sizable operating losses mean that losses from operation and a very large net loss of 338 million for the year. But this is very misleading. Such a large portion of this loss is because of this changes in fair value of warrants and earnout liability. Now this is something that I warned of last month over on the Patreon, where I wrote, in the next earnings report for the period, the share price was about $20. Once more, I expect a sizable loss on change of fair value. Although Matterport has dropped close to 80% of its value, I feel that this could drop more over the next few weeks, and I think that somewhere between $5 and $7 will be a very good entry point. I do feel that the stock will begin to turn upwards before the release of the Q1 2022 report, so keep an eye on that. I wrote this for the Patreon group back on January 28th. So what exactly is this? Well, as I said a moment ago, this is remeasurable. If the share price rises, then this liability gets bigger and its impact gets bigger. But if the share price falls, this liability gets smaller. Looking at the notes to the accounts, the earnout shares can be activated in tranches of 3.9 million shares from $13 up to $25. Because the share price was quite high on December 31st, this is a reason for this big liability. However, given the current share price is so low that none of these earnout shares would ever be activated, I fully expect that the next earnings report in May will show a huge shift in the profit and loss for Matterport, and with increased revenue and margins, I expect this to be a time when Matterport bounces back very strong. The Q1 earnings report will also include a balance sheet greatly boosted by the recent redemption of all the company's warrants at $11.50. Giving proceeds of over $104 million, meaning that no public warrants remain outstanding. Looking at Market Beat, we can see that Matterport is currently at the bottom of its 50-day range and 52-week range after hitting its 52-week low earlier this week. This shows that Matterport has dropped about 85% of its value recently and is currently just 1.6 billion. With institutional ownership now up to 33%, this is a big increase from 26% at the time of my previous video a few weeks ago, and we can see here significant buying in the second half of 2021. The most heavily invested institutions are Morgan Stanley, Wafra, and Qualcomm, who are one of the world's largest companies in the semiconductor industry. And looking at the most recent data available of Fintel, the short interest days to cover is 1.73, while the short float is now at 14%. The analyst price target consensus is $16. The most recent ratings and price targets were set this week by Credit Suisse analyst John Walsh, who has set a buy rating but lowered his price target again to $23, which is more than 200% upside from the current price. Looking at tip ranks, we can see that John Walsh is a 5-star analyst with a 64% success rate, while the other recent price target is set by Wedbush analyst Daniel Eves, who is also a 5-star analyst according to tip ranks with a 63% success rate, but he has slashed his price target from $38 down to just $10. But even this price represents significant upside from the current price. But what do you think of where Matterport is right now? Given that I was right about the huge liability and that Matterport was going to drop after earnings were released, do you think that I am right that Matterport should start seeing a reversal in mid-2022, or do you think that this will drop even further? Drop a comment down below and let me know what you think. Subscribe to the channel and I'll catch you in the next one.